Welcome to the Mycitizenagency channel. In this video, we will take a detailed look at the tax benefits and advantages available to you after obtaining a European Union passport. Many clients believe that an EU passport only allows them to travel, live and work freely in any country of the Union. But in fact, this document also opens up a whole range of financial benefits. Let's take a look at what tax benefits are available to EU citizens and how to use them correctly. First of all, it is important to understand that in most countries, taxation depends not only on citizenship, but also on tax residency. The key criterion is the number of days you live in a country. If you spend more than 183 days a year in a particular country, that country will most often recognize you as its tax resident. This rule applies almost everywhere in the world, and the European Union is no exception. Tax residency determines your obligations. You are required to file your tax return in the country where you are considered a resident, and you will pay taxes there on income received both within and outside the country. However, an EU passport gives you additional opportunities. You can choose your country of residence and accordingly your tax jurisdiction based on the conditions that are most advantageous for you. In other words, having an EU passport opens up a range of choices for you. Whereas previously you were strictly tied to your country of residence, you can now plan your life more strategically, assess where income tax rates are more favorable, compare social benefits and family allowances, consider how different countries treat income from abroad. Thus, with a European passport, you have the opportunity not only to live where you like, but also to consciously choose a tax system that will allow you to keep more of your income and create a sustainable financial model for your family and business. EU countries actively compete with each other to attract new taxpayers, especially those who plan to invest, start a business, or simply live in the country. Therefore, each country strives to offer special conditions that will make it more attractive to potential residents. Among the most popular benefits are the following: reduced tax rates for new residents. Many countries understand that individuals or families need incentives to relocate and adapt. That is why some countries have a special regime for new tax residents. Income earned abroad is partially or completely exempt from taxation for a period of 5 to 10 years. This allows you to save more money and calmly build your financial strategy. Tax credits and deductions. European legislation is designed to ensure that the tax burden is fair and does not lead to double taxation. For example, if you have already paid tax on a certain income in one country, it will be credited or deducted in another. This is especially important for those who conduct international activities, have businesses or real estate in several countries at once. Exemption or significant reduction of inheritance and gift tax. In a number of European jurisdictions, such taxes are minimal or non-existent. This is especially important for families planning to transfer capital and property to their children in the long term. In some EU countries, inheritance tax may be a symbolic percentage, and under certain conditions, it may be completely zero. Special programs for investors and retirees. Some countries offer additional benefits for those who invest in the economy or transfer pension payments to their country of residence. This can take the form of fixed tax rates or exemption of part of the income from taxation. Thus, having an EU passport gives you the opportunity to choose the country with the most comfortable system of benefits and adapt it to your life goals, whether it is capital preservation, business development, or financial support for your family. To better understand the specific benefits available to new EU citizens, let's look at a few concrete examples. Portugal. Here there is a so-called new resident regime, non-habitual resident NHR. For 10 years, foreign income, such as dividends, interest, or pensions from abroad, can be completely exempt from taxation. At the same time, domestic income is taxed at a fixed preferential rate, which is significantly lower than the standard rates. This makes Portugal particularly attractive for those who plan to live by the sea and optimize their taxes at the same time. Malta. The island nation is known for its lenient taxation of dividends and convenient mechanism for crediting taxes paid abroad. In fact, this allows the effective tax rate to be reduced to very low levels. Malta also offers transparent rules for international companies, making it a popular choice among business owners and investors. Cyprus, one of the most famous European jurisdictions for entrepreneurs. It has low corporate income tax rates, no dividend tax for non-residents, and a number of benefits for individuals, including concessions for new residents. Cyprus is often chosen by IT entrepreneurs and investors who value a flexible and friendly tax environment. Italy and Greece. Both countries have special fixed tax programs. The essence of these programs is that taxpayers pay a predetermined amount each year, regardless of how much they actually earn outside the country. This solution is particularly convenient for wealthy individuals who want to live in Southern Europe and know their tax burden in advance. Slovenia. This country is gradually gaining popularity among those seeking a balance between quality of life and tax policy. It has a progressive tax scale, but there are benefits for new residents, including the possibility of partial exemption of foreign income from tax. In addition, Slovenia is known for its transparent system and favorable regime for companies investing in innovation and development. Thanks to its convenient location in the center of Europe and relatively moderate tax rates, the country is becoming attractive to families and entrepreneurs who want to do business in the EU and have access to major European markets. All these opportunities are only available to citizens or permanent residents. An EU passport guarantees you the right to freely choose which country to settle in and which tax advantages to use in your long-term strategy. Another important point is international agreements on the avoidance of double taxation. European countries have concluded dozens of such agreements with other states to protect residents from a situation where the same income is taxed twice, in the country of origin and in the country of residence. What does this mean for you? If you have assets, businesses, or investments outside the European Union, you can legally optimize your taxation if you do it right. For example, income already taxed in one country will be partially or fully credited in another. If there is an agreement between countries, a reduced tax rate may be set on dividends or interest received from abroad. Certain types of income, for example, profits from the sale of shares or real estate, may be taxed in only one jurisdiction, which significantly reduces the overall tax burden. These agreements are especially important for people with an international lifestyle, those who own real estate in different countries, those who do business or work for an international company, who receive a pension or investment income from abroad. Thanks to double taxation agreements, an EU passport allows you to feel much more free on a global scale. You can earn income in different countries and be confident that your interests are protected at the legislative level. For company owners, an EU passport opens up truly broad horizons. It allows you not only to do business in a stable legal environment, but also to take advantage of tax incentives that each country develops to attract investors and entrepreneurs. The ability to open a company in any EU country. With an EU passport, you have the right to register a company with virtually no restrictions, whether in Cyprus, Germany, the Netherlands, or any other country. The process of starting a business is easier for EU citizens than for foreigners, and in many cases takes a minimal amount of time. Access to uniform European trade and financial rules. By opening a company in any EU country, you automatically gain access to the common European market with hundreds of millions of consumers. This means no customs barriers within the Union, simpler rules for the movement of goods and services, and the ability to freely hire employees from other EU countries. More favorable income tax rates in some jurisdictions. Cyprus, Ireland, Hungary, and a number of other countries are known for their low corporate tax rates. This allows you to significantly reduce business costs and allocate more funds to development. Use of tax incentives for investment in innovation, research, and development. European countries are interested in entrepreneurs creating new products and technologies. Therefore, generous tax credits, subsidies, and deductions are available to companies that invest in scientific research, digitalization, or environmental projects. In a number of countries, such expenses can be deducted from the tax base at an increased rate. As a result, as a business owner, you have the opportunity to legally optimize your tax burden using official tools provided by EU law. This not only reduces costs, but also strengthens the trust of partners and investors, as your activities are based on fully transparent European rules. Don't forget about the tax benefits related to family and everyday expenses. Many EU countries strive to create the most comfortable conditions for their citizens in order to support family values and stimulate economic activity. Tax deductions for children and spouses. In most EU countries, the tax base is reduced depending on the number of children in the family. The more children, the higher the benefit. The status of spouses is also often taken into account. If one of them is temporarily unemployed, the other receives an additional deduction. This helps to significantly reduce the burden on the family budget. Deductions for education, healthcare, and mortgages. Expenses for children's education in schools and universities, medical services, and mortgage payments can reduce the tax base. In this way, the state returns part of your expenses to you, supporting long-term and socially significant investments. Support programs for young professionals and retirees. A number of countries have special tax regimes that make life more affordable for those who are just starting their careers or, conversely, retiring. Young professionals can count on reduced rates in their first years of work, while pensioners can count on preferential taxation of foreign pensions or fixed low rates. Regional initiatives. Some countries offer additional benefits for those who move to less populated regions. Thus, families who choose a quieter lifestyle away from big cities also receive tax bonuses. Together, these measures allow European countries not only to attract new residents, but also to retain them by creating conditions for family well-being, stability, and confidence in the future. Once you have obtained an EU passport, you have the right to choose, but your choice must always be well-informed and strategic. Tax benefits are not a one-off decision, but a long-term tool that must be used wisely. Consultation with specialists. Before changing your tax residency, it is important not only to focus on general information, but also to carefully analyze your specific situation. Business income, investments, real estate, pension savings, all of this must be taken into account to avoid unexpected tax liabilities. Determining the center of your life interests. It is advisable to plan in advance where your center of attraction will be located: housing, work, business, or main family ties. These are the factors that tax authorities most often take into account when determining your residency. This approach will help you avoid conflicts between jurisdictions. Strategic planning. Remember, the correct use of tax benefits is not a temporary measure, but a well-thought-out strategy for years to come. It will not only reduce your burden here and now, but also build a sustainable income management system that will be beneficial for you, your family, and your business in the future. Flexibility and adaptation. The economic and tax policies of countries can change. Therefore, it is important not only to choose the best country today, but also to be prepared to adjust your strategy depending on new opportunities that may arise tomorrow. Thus, an EU passport gives you a valuable tool, the right to choose, but it is the quality of this choice that determines how effectively you can use tax advantages and how stable your financial future will be. A European Union passport is not only about freedom of movement and new career opportunities. It is also the key to financial flexibility, access to international benefits, and the opportunity to build a future that takes into account the interests of your family and business. Use this tool wisely, and you will not only save on taxes, but also build a sustainable and transparent financial strategy. And if you are just planning to immigrate to the European Union, leave a request for a free consultation at the link in the description. We will study your situation, draw up your personal immigration plan, and prepare a complete set of documents for successfully obtaining citizenship in one of the European Union countries. Thank you for watching this video. If you are interested in this topic, subscribe to the channel and feel free to ask questions in the comments. We regularly publish program reviews, answer frequently asked questions, and share important news about immigration law and life in the EU. Your journey to Europe begins with the first step. Mycitizenagency is with you every step of the way.